because the goal to trading divergence perfectly is the ability to know when you should not use it. If you can answer that question when you should not use it, actually that's the answer to everything in trading. If you know when not to do what you're learned or what you're trained to do, that is the $1 million answer. Probably $100 million answer, right?
Yeah.
So today's topic is on divergence. Divergence. All right, Ian, I'm going to ask you a question, you and everyone else who's in this room. Have you guys ever had a friend or a relative or a spouse that if you say yes, they say no?
Oh, I know I have anyway, so for sure.
Like, right? Like there's always that one person that like if you say yes, they say no, and if you say no, they say yes. This is what divergence basically is what we're looking for is something opposite. Okay? There's a whole bunch of wives and husbands showing up in the chat. But okay. But so what it is price is on one side. Okay, just a quick rundown. I'm going to give you a quick rundown because I noticed you also asked me about a little bit more questions and you even wanted a strategy. So we'll even go into it where I'll just give you a strategy that you can play around with towards the end. Yeah.
Awesome.
So,
that sounds great.
So there's price on one end, as you normally see price moving, right, on a chart, doing certain things. And then below the price, we generally have whatever indicator we've put in there, right? Let's put in there as the indicator. Now, since price is going down, generally your indicator should also be going down, okay? To make it simplistic, I'm not going to go into the vocabulary of things, but if price is going down, the indicator goes down because what does the indicator do? Since the longest time you've known me, what do I always say about indicators? What do indicators generally do with price?
They lag behind what price is doing.
They lag
behind.
I
guess they follow what price is doing. So.
There you go. They follow it, right? So they're following price. So that's their job. But what happens when they don't follow it? Okay, that's what divergence in essence is the ability to find out when what your price is saying does not match with what the indicator is saying. Okay, so imagine yourself as price and imagine indicator, that friend or spouse or relative that just doesn't agree with that. When there's a conflict, what happens next in general relationships when there's a conflict?
Argument of some sort, or
yeah, well, not generally an agreement. Agreement is more like political, right? That's like in real life, we all wish that would happen, but in reality, there's an argument and people start fighting.
Yeah.
And when people start fighting, one person eventually wins.
Yeah.
That's basically what the divergence outcome is. It's an idea of things are gonna turn around. Okay. So what we're doing is we're gonna be looking at how divergence gets affected in real life scenarios. Okay. So, and then we'll bring into some charts. So now you asked me about certain trades that I did, and I'm going to walk you through the trade that I did. All right. So what I'm going to do is I'm going to clean this up. Let me move this down. I'll clean it up and I'll put in a simple indicator here. Yeah. I'll call it
What indicator do you use? I was wondering, that was one of my questions actually. Is there a specific indicator you use?
So to you know, that's a good question about what indicator do you use to trade divergence. It's actually, you can use multiple indicators that you want. If they're momentum based, like the RSI, the relative strength index, or the MACD, or people call it MACD. So we're using MACD for this example. Maybe we'll switch it up to RSI later and we'll discuss it a little bit. Okay, so for now, I'll just remove the histogram so it's easier to see this. So take a look at this very carefully here. Okay, now that my first trade that I did was right there. Okay, now let's talk about this. Notice on the 15-minute chart I'm on right now, what do you see the price doing over here?
Going down at that point that you have the purple line there, it's just broke below, going down. So
exactly, it's making lower lows, right? It's very simple, it's very visible. What do you think my my indicator is doing?
Going down as well.
Going down. Two people agree, there is no conflict in the house, no one's throwing stuff at each other. Perfect, no problem so far. Okay, then the market turns around and he starts to come down almost in the same spot as an exact low. But what do we have that situation if I look exactly down? Do I have those similar tendencies?
No, it doesn't quite go as low. It's actually stopped a bit higher. So now you got a higher low on your indicator.
Yeah, there's a higher low on the indicator. Generally, when you see, this is what we call divergence, okay? There's two sides to divergence. Now, there's multiple terminologies around it. There's a bullish divergence. There's multiple types of divergences. There is the bullish divergence, bearish divergence, hidden divergence. Like there's all kinds of words. I'm trying to keep it simple by saying, if you spot a opposite, something is wrong. Okay? And that generally is an indication that price is going to turn. Okay? And then if we go into the $1 million question is when? Whenever you draw your divergences, many times it'll look like, yeah, but what about here? That looks like it's a divergence. What about here? That looks like it's a, well, not that one. You see, it's very subjective, right? You feel like that? Like there's no clear-cut answer?
That was one of my main questions. Well, after hearing you, that was one of my main questions. Like how do you, is it determined on your time frame you're on, or how do you determine like exactly where to draw this? So you know, because you could draw it anywhere really. You could make an argument for both sides really. Like
there you go. There you go. So at any given point, like it's like the market. At any given point, someone is buying, someone is selling. But even the divergence, someone can read it a different way versus someone can read it a different way. So how do I know exactly what is the correct way to read it? Right. So it's a very good question. All right, let's take a look at this. Divergence also, like most things, falls under context. Okay. I don't know if you've seen some of my other webinars where I always like to use the word, it depends. Like whenever you're doing something, the answer is always, it depends where it's at and what it's doing. Okay. You can't just blindly follow something because it won't work like that. Okay. Yeah. So in this particular case, look at the story that it's been coming from. Would you say this is a downtrend? Yeah,
slightly, yeah, but it is going down.
It is going down, right? So now what does a downtrend normally do? Let's go into super basics. What's a downtrend?
Lower lows and lower highs, generally.
Lower lows, lower highs. So do we have a, from this lowest point, do we have a lower low?
Yeah.
From this highest point, do we have a lower high?
Yep.
Okay, so far so good. Very basic stuff. What do we know about a trend that's even further than lower low, lower high? What more information do we know about trends? What about the support resistance?
Trends usually, they move a lot farther and they generally will stop and bounce off support and resistance areas. Like they won't come in any deeper.
There you go. So if this is a trend down, then the trend is supposed to respect an SNR. But he doesn't respect an SNR. He goes up, still making a lower high, and then it goes down again. What is this turning into?
Oh, it's turning into a channel, basically.
A channel.
And then it's kind of slowly turning into a range, and then now it's putting in a higher low and everything. So
okay, so a downtrend, initially it started as a downtrend. It was respecting SNRs, and then it didn't. Then it turned into a channel, and then the channel turned into a range. Do you see the rhythm if you were to draw like a little snake on this? It's like he's going down strong, slows down, and going sideways now. And then a divergence shows up, and the market for the very first time goes up.
Okay, yeah.
That context is telling me this divergence is for real. I want to stay with the buy flow as much as I can. So I'm not looking at this dot. I'm looking at in context of where is my divergence coming from. In the story, in the big picture of this whole chart that I'm looking in front of my eyes, where is it coming from?
So it's like you got to get a feel of what overall is happening just from how price is reacting, and then from there, further confirmation could be divergence.
Correct. Added. Yeah. Let me ask you this question in this way. Okay. Let's say you're out on a date, right? Let's say you're out on a date. Please don't tell your wife I said this. Let's say you're out on a date And on this date, this is before you got married, okay? This is before you got married. So on your date, you take this lady to a nice fancy place, you order some food, and she's cringing a little bit. You can see her face. She's like, I'm happy to be here. And then the moment the food arrives, then you order dessert, and then she's feeling very uncomfortable. You are seeing signs of something is wrong, something is wrong, something is wrong, until you ask the question, hey, is anything wrong? You've now opened up that door for her to actually say, yes, there's something wrong. That's basically what a divergence is. As if you're looking at a divergence just in terms of decoration, that's telling you it's going to do something, find out why should it do something. It started off nice, then it started to die out. And after dying out, when the divergence showed up, you can trust that, you can believe in it, that, yeah, actually that makes sense. The divergence can work. Now, when the market starts to go in a specific direction, generally, what do you notice about the movement when it goes in a specific direction? Does it get faster or slower?
Well, generally for most trends will start out slow, then get faster, and then slow down again, like once the trend is finished doing its move. So
okay, so I'm going to ask you this two sets of questions, and then let's see if you can help me out. When do you notice when things go faster?
Generally on the second kind of push. Like generally it takes one, from what I've seen anyway, it'll make one decent push, but then usually the next push is typically larger than the first one. And then
okay, so I'll explain. So when you see movements that get faster and faster every time, that's because you're changing the market direction. Okay, when you're changing the market direction from a down back to an up, the speed picks up dramatically. However, during a pullback, what's your speed supposed to be like?
Oh, you want it to be slow, like
pretty
in
slow
comparison to push up anyway.
Okay, now having that said, when your speed is supposed to be slow, now watch very carefully. This movement goes up, then it comes down, then it pulls up 20%, comes down a little bit more, pulls back 70%, and then it does this.
Oh.
Is that normal?
No, I wouldn't say that's normal. No.
That's what we call the market's overextended. For the little seller, for that downtrend guy, it's overextended. Okay, it's gone. If you were to draw something called like Bollinger Bands or something like that, this is now going to be in the overextended territories. Now, this overextendedness is 9 out of 10 times divergence, period. Because your indicator cannot catch up to it. Your indicator's hugging this guy the whole time. He's hugging that guy. He's like, oh, you and me, we're going to be together forever, because the indicator follows price.
Yeah.
But when it goes out of control, the indicator has not caught up to it.
That makes sense, yeah.
Okay.
So it's a lag. The divergence is almost the lag between
there you
the
go.
two.
And that lag, what happens is people who are greedy and get an emotional response from the market, they jump onto the sells. When in actuality, you will see a divergence telling you something's wrong, we're probably going to flip around. And that's the times where a lot of the larger players are like, come on, come on, come on, got it. And then they hit the buys.
Okay.
So the whole point of all this thing is context. If you don't have context, nothing in trading will ever make sense, because why should it? Why should it? It's always context. But the thing is, the entire industry is focusing so much on trying to learn, what should I do? What should I do? But they never understand, why should I do this here? What happened to the other guy? If you don't think in that language, then any technique, any strategy you use, it will be perfect one day, not perfect the next day. And that's why people hop, right?
More gambling-ish, like that way, when you're just basically you're hoping it's going to work this time, and then sometimes right, sometimes you're wrong. So.
Yeah, exactly. Like when you started, Ian, how many techniques or strategies did you hop before you?
I don't know. I can't even count, honestly. So it was.
But okay, but forget the count. What about the
Yeah.
reason behind it?
Oh, there is basically there's not a lot of. I don't want to say every technique's bad, but like a lot of them, it's just your pattern or a candlestick pattern, or you just there's no reason behind any of it. It's just kind of, and that was one part that I found frustrating, I guess, and why I enjoyed learning from you, because you put an actual like reason behind everything, so it made sense. Why am I doing this? So
Right.
whereas a lot of things don't have that explanation. So.
Right. It's the same question when they asked me back in the day. It's like, Navin, why do you go to work? To make money. What are you going to do with that money? I'm going to buy a nice car. Nice car to do what? Well, to go to work. And then what are you going to do with when you have a nice car? I might get a promotion and this, and I'll work harder. And what are you going to do with the promotion? I'll buy a house. Where are you going to buy your house? Closer to work. I used to sit there. I'm like, I don't understand what I'm doing. I'm so lost. It doesn't. I'm in this cycle that makes no sense. And then when I quit all that and I got into Forex, I was in that same cycle. I didn't know why I was doing what I was doing. I just kept doing it because somebody told me to do it.
Yeah.
And that's where the biggest flaw is in trading, is if you don't know what you're doing and why you're doing that, it's over.
Yeah, the why that's what I've learned the most. The why behind it's like probably the most important thing I've picked up, so knowing.
Yeah, absolutely.
Reason,
all of you guys,
right?
yeah. No, I agree. Absolutely. I'll leave you guys in this room. Do you guys agree with this? Yeah. Yeah, absolutely. If you don't know what you're doing, it's just a waste of time. It's just a waste of time because you're going to hop from one technique to the next because the last technique didn't work the next time.